Hey, good morning, good afternoon, good evening, everybody. How are you doing? Testing 1, 2, 3. Do me a favor and type a 3 in the chat if you can hear me loud and clear, please. Hey, Laurel, Victoria, Mark B. How's everybody doing? Jody, KP, sound good? All right. All right, awesome. Give me just a couple seconds here. I'm going to move my slides over and we'll go ahead and get started. Be back in about 30 seconds, so grab something cold to drink and we'll be back momentarily. All right, we are back and we previously got clearance there on the audio and visual. I did move my slides around, so just do me one more favor, type in another confirmation that you can see my first slide here, mechanical done for you strategy, any market, any time frame. Iris says she sees and hears me. All right, good. That's appreciate that, everybody. Let's go ahead and get started here. I don't want to waste anybody's time. It is 7 Eastern, 6 Central in my neck of the woods. Appreciate everybody joining me today. This is very exciting time in the market and very exciting time to be using this strategy. I'm coming close to probably now 15 years or so using the strategy. Is absolutely my bread and butter. And we're going to look at several examples. I encourage you to stick around to the end. We're going to dive into the live market, see what happens, show all of the stuff that's cooking here in the markets using this simple strategy, and very excited. So my name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader, and I do truly appreciate you taking time out of your day, whether you're busy or maybe not as busy in the Corona conundrum quarantine situation, but I hope everybody's staying safe out there and is really an awesome time to learn some trading education, learn some new strategies that you can add to your toolbox. So let's go ahead and get started. I appreciate your time, and we're going to spend about 60 minutes or so. And we are recording this. Cannot guarantee any recordings will work due to technology and other factors. But so go ahead and take notes. Ask all the questions you want during the presentation. I'm not ignoring you. I do want to get through the meat and actually teach you something that you can start working with immediately. And then I'll go through at the end, answer all of your questions, take your symbols and all of that. So let's get started here. We must always begin with our risk disclaimer as required from our regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. Only risk capital should be used to trade. You can lose money in trading. So I know everybody's probably familiar, or you should be familiar with the risk disclaimer. In short, don't trade with your rent money, your mortgage money, your milk money, your child's educational funds. You can lose money in trading. So while you are reading the rest of that, do me a favor. I'd like to see who I'm talking to. Where is everybody from? Where are you joining in from the world? I am in LA or Lower Alabama on the Gulf of Mexico, right near Mobile Bay. And let's see. So we've got an actual Los Angeles. Alabama, we're at in Alabama, Rosie. Utah, Dallas, California, Massachusetts, Valrico, I don't know if I'm pronouncing that correctly. Columbia, nice, welcome. Atmore, okay. Not too far up the road there. Scottsdale, Houston, Kuwait. It's got to be a first there. Welcome. I don't want to pronounce your name, but welcome from Kuwait. West Texas, awesome. So people from all over. I know it's early for some, late for some, maybe the middle of the day, and let's go ahead and get started here. So I'm going to introduce myself once again. My name is Silas Peters. That's me standing for my alma mater there with my two beautiful daughters at the University of Alabama in Tuscaloosa. And here are some other pictures of us, my wife and family, just kind of hanging out during this Corona situation. School's canceled, so we spent plenty of time at the Bay. We usually do that anyways, but we spend more time down there trying to take a break and just getting through life. You see they've made some masks down there with kitty and puppy bass. I didn't get one, but they made themselves one, so I guess that's what's important. So anyways, 3 days after I graduated from the University of Alabama, I sold my car, packed up my belongings, and I drove north. I drove straight north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And while here, I was bitten by the trading bug, and I never really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spec traders, and the like. I've also been a part of building and managing several futures and equity brokerage firms, mostly managing operations, trading, back office sales, and support. Also worked as a private family office investment consultant to ultra high net worth individuals, hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But it wasn't always easy. In fact, there was a learning curve, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School does not teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that I was, but ignorance and greed cost me my profits. Blew up an account, then I blew up a few others in what I like to call revenge trading. I'm sure a lot of you can attest to that. Finally went back to my roots, found my process, settled down, and found overall consistency. So enough about me, let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? This is actually not my trading desk. This is a poor attempt at humor. I found this on the internet, but I wanted to show this is because I feel like it's the perception of what a lot of those on the outside think that us as traders do, or what our offices look like. We're sitting in a basement surrounded by all these monitors, and we've got lines and numbers blinking and whizzing around. Now, my desk did look like this in Chicago for obvious reasons, but certainly not today. I have paired back to a handful of monitors for charts, quotes, trading platforms, and the internet for day-to-day operational stuff. But this is certainly not needed. And a lot of everybody's saying absolutely not. Somebody says 8, Al says 8 monitors. We don't need this. All it does is lead to confusion, and it leads us to this slide, paralysis analysis. Who here has been a victim of paralysis analysis, or maybe is currently a victim? I'm raising my hand. I've been a victim. I've been there, done that, got the t-shirt. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the analysis they possibly think they could have done? They go to pull the trigger, put their finger on the mouse, and then, all of a sudden something pops up contradicting what they had thought that they needed to do. So everybody's pretty much been in that situation or has been a victim of paralysis analysis. So I am here today to try to teach you how to get rid of the paralysis analysis situation. So let's talk about what you trade. I like to see who I'm talking to. You trade stocks, options, futures, Forex, cryptocurrency. I trade all the above with the exception of crypto. So I do actively trade stocks, options, futures, and Forex. I do have accounts, if you will, across the internet in various crypto exchanges. Honestly, don't even know how to get into half the damn things, but I view it more as a lottery ticket. But let's see, so we've got a lot of options, stocks and options, all the above, there you go. So futures and Forex and stocks, very new to options, Forex options, stocks, learning options, awesome. Indices, okay, cool. So that's great, a big diverse group. And I have good news. What I'm going to share with you works on all those markets, regardless of what you trade. I'm going to prove it to you. It's highly accurate, it's profitable, works in all time frames, and it's 99% mechanical. But most importantly, it is simple. So we are not here to teach rocket surgery today. We're going to try to keep things straightforward and simple. All right. So I do have an agenda promised to you. We're going to learn the simple mechanical setup that is repeatable regardless of the market or time frame. And at some point during the presentation, I'm going to stop and ask you, have I fulfilled my promise? And I hope to see a lot of yeses. And if I have not, put a no, put a big fat no in there and tell me why I have not fulfilled. So speaking of promises, if you are here today, you may have seen or read something about the $10,000 trade promise. Now, full disclaimer, I'm not going to promise you anything in trading and not in life, but these were trade setups that we talked about in multiple free presentations, such as this one, about a potential $10,000 trade setup, and not just on one market, but on 3 markets. Here you can see crude oil, RBOB, and lead gas, and we also have one in nat gas not displayed on the screen. We talked about a potential setup that was forming that had the ability to deliver $10,000 per contract. And you know what? They actually did that. They went on and met their $10,000 per contract objective and then some. We also talked about so-called sleeper markets. Here you can see charts on coffee and OJ. You can see here from a 5, 15, and 30-year historical price perspective, they tended to bottom out at this time of the year. Does that mean that we went and got long these markets, that we bought OJ, we bought coffee, we bought call options, call spreads, sold put spreads? No. We said wait patiently for a very specific setup to occur that you're about to learn here in a moment. And they went on and triggered to their $5,000, $6,000, $7,000 per contract price objective. We also talked about markets in corn, beans, and wheat. You see, corn and beans, markets tended to get quiet or bottom out at this time of the year based on a 5, 15, 30-year historical price perspective. That's exactly what they were doing. We had favorable weather out in the Midwest. The markets were getting almost too quiet, eerily quiet. Does that mean that we went and got long these markets? No. But we knew not to be sellers of those markets. Why? Because we waited for this pattern that you're about to learn to form and trigger, and that's what they did. They went on and met their $6,000, $7,000, $8,000 per contract price objective. So who here is ready to see the setup responsible for these very recent trades? I'm talking very recent within the past few weeks. So here we're looking at 750 total S&P points on the left-hand side. We're looking at 160 points there on cocoa, 300 pips in the Aussie Kiwi, and 2 $20 trades there in Facebook off of a daily chart. So this presentation is not all about futures or commodities. We're just trying to show you examples of trade setups that literally occur over and over again on a daily basis. So everybody's pretty much saying, yeah, put me in, coach. You're ready to play. All right, so here we go. It is the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. Who here is familiar with the 1, 2, 3? I would suspect 99.8% of you are. I didn't invent it. It's been around for decades, maybe hundreds of years. One of the most fundamental technical patterns in the textbooks. We're talking about Technical Analysis 101, but it is highly, and I mean highly, overlooked by most traders. So I'm seeing a lot of yeses, and that's normally what I see. Everybody's like, oh yeah, I'm raising my hand. I'm familiar with 1, 2, 3. Well, my question will be, and you will be questioning yourself, why are you not using it? So I'm going to show you some very powerful examples, and stick around to the end and we'll dive right into the proof. So let's talk about the setup. It's price action based. The pattern is comprised of a low and then a higher high and then a higher low and a break of that higher high in the instance that we're going long. The rules are the same, but inverse if we're going short. It anticipates a change in trend from up to down on a break below the 2 or B point, anticipates a change in trend from down to up on a break above the 2 or B point. The strategy, it usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. I will stress that it works extremely well when the pattern sets up at important or significant areas of support and resistance, head and shoulders, tops and bottoms, double tops, double bottoms, and so forth. So you may argue that, hey, is this a counter trend strategy or a reversal type strategy? And in essence, it is, but we're going to talk about ways that we could filter these out a little bit more to even put the odds further in our favor. So let's look at this chart here. This could be Bitcoin, it could be Walmart stock, it could be the Australian dollar. It doesn't really matter. We're just learning the basic mechanics. So here for the 1, 2, 3 top, point 1 is when we have that highest peak and we are at resistance, and then we trade down. We get an established number 1. Market moves down. Once we stop making these lower highs and pull back, we get an established number 2. Market retraces higher and pulls back, gives us an established number 3. 1, 2, 3. The market could have traded as high as up here, or even as high as up here, as long as we don't take out the number 1 high. 1, 2, 3. So for a 1, 2, 3 top, we know we're looking to get short on breaks or closes below the number 2 point, which is what we get here, and it trades to the downside. Let's look at the 1, 2, 3 bottom. Same rules apply, only in inverse. Here, the market moves down, finds the lowest low or support, trades higher. Once we stop making these lower highs and pull back, we get an established 2. 1, 2. Market's trading lower. Once we stop making these lows and pull up, we get a number 3. 1, 2, 3. Markets could have come here, could have come here. As long as we don't take out the number 1 low, we have a 1, 2, 3. Now for 1, 2, 3 bottom, we know we're looking to get long breaks or closes above the number 2. We don't know what happened in this example, but that's what we would be waiting for. So let's start off with some chart examples. I'm starting with the 1, 2, 3 top. This is a daily chart of the Australian dollar, the 6A. If you don't trade futures, you can look at the ETF FXA. If you don't trade futures or ETFs, you can look at the Forex pair, the Aussie US. You're going to see the exact same setup and pattern. Now, when we look at a daily chart, we primarily like to focus on 52-week highs or 52-week lows. That's not something set in stone. It's just going to give you the highest probability. Now, we'll talk about ways later where you can dial that in tighter, say every 6 months, every 90 days to find these patterns to give you more opportunities. But for this example, we're going to looking for a 52-week high. So we have a number 1 point here, as indicated by the number 1 red circle. Why? It's a 52-week high. Market trades lower, pulls back up, giving us a 1, 2. Market only retraces higher here by about 4 or 5 bars, and then pulls down. So this is a smaller pullback, but it's still valid. Remember, we could have traded up here, or up here, as long as we don't take out the number 1 high. So we have a 1, 2, 3. And on a 1, 2, 3 top, we're looking to get short on where? Breaks or closes below the number 2. So you say, that's great, Silas, I already know the pattern. But what about the other important parts of the recipe? Where is my risk? Where is my profit? Where my take? Where's my limit orders? All very good questions. So your initial risk must be above the high of the number 1. Your initial target is the distance between the high of the 1 measured to the low of the 2, and then measured down. So it's about 225 ticks or $2,200 per contract in this example. So you say, well, yes, it's a 1-to-1 risk reward ratio right off the bat. Risk up here, target down here. But we're going to talk about ways where we can quickly adjust our risk to protect our capital. So it's very important to let the trade to materialize in its anticipated direction. So you see we start breaking down here. Once we start breaking down, where's the next logical area of risk? The next area of resistance here. So we can quickly, once we start breaking down and moving into profit, we can adjust our risk to the next area of resistance, quickly cutting our risk by 50, 60, or even 70%. John says there's no sound on his Android phone. I just want to confirm that audio is good for everybody else before I continue. I don't want to talk into a black hole. Let me respond to him. All right, great. I'm glad that the sound is working. All right, so John, I responded to you. So let's keep trucking. Let's look at another 1, 2, 3 top example here. This is a daily chart of Walmart, WMT. Here again, red number 1 point. So 52-week high. 1, 2, 3. 1, 2, 3. We know what? we know well in advance what 99% of us traders struggle with. Where am I getting in? Where's my risk? Where's my targets? Where am I taking profits? We already know that days in advance. With the 1, 2, 3 top, we know we're looking to get short on breaks or closes below the number 2. We know our initial risk is going to be above the high of the 1. We know our initial target is the distance between the high of the 1 and the low of the 2, measured down, which is about $5 in this example. All right, so Chris is on Android 2, had to reboot, no problem. All right, let's look at the 1, 2, 3 bottom example. Now this is a 15-minute chart of EMini SP. So on an intraday chart, whether you're looking at a tick, 5, 15, etc., it doesn't make sense to look for 52-week highs or 52-week lows. So what we're looking for on an intraday chart are what we call session lows or session highs. How do I define that? I define that by going back to the Globex Open. So if you're not familiar with futures and Forex, they trade darn near around the clock, 23/6, opening at 5 p.m. Central on Sunday afternoons, trading into the Asian session, into the European session, into the New York session, shutting down for about an hour, reopening, rinse and repeat until Friday afternoon. So wherever you start your trading day, I start mine around 6 a.m. Central. We're looking for new highs or new lows from that point forward. All right, so here we have a session low as indicated by the red circle, 1, 2, 3. Now aggressive traders would be getting long here, working maybe a buy stop, a tick or two above the number 2. So you're triggered into the long here on the initial buy stop. Now, a couple of alternative entry methods that I prefer to use are to either A, wait for the market to break out and come and retest and get long here, or alternatively, wait for the market to come back and hook back up and through the breakout area. So we busted up, market trade lower, came back, and you're getting long in that second attempt, okay? So if you use that entry method, a couple of things are gonna happen. A, you're gonna miss out on some profitable trades. Sometimes the market will bust up above the number 2 and zip on up to profit target. No need to worry about it. There's plenty of other markets and time frames. Don't worry about missing the trade. What is it also going to do though? It's going to help keep you out of potentially losing trades. So the market will sometimes come up, fake you in, and then roll over and get you stopped out. So that's why I like for the market to come up, comes back down, and we get long at second attempt, okay? So that's going to keep you out of some winning trades, keep you out of some losing trades. Now, let's look at a weekly chart of Apple. Hell of a way to catch some longer term position type moves. Here we have a weekly chart, number 1 low, multi-week low. Excuse me. Market trades up, back down. We also have a double bottom, 1, 2, 3. Market breaks above the number 2 here on this large bullish candle, and then trades sideways for a few weeks. But then what happens? The market comes back down, retests the breakout area, and or hooks back above. That's our confirmation to get long. How do we get long? We buy Apple stock, we buy call options, call spreads, sell out of money put spreads, whatever your flavor or style of trading may be. Now, this is what a failed trade looks like. Sorry to burst your bubble. They don't all work. No holy grail in trading or in life, but you are big boys and girls. You already know that. It's a 5-minute chart of the EMini SP. I like the setup. I probably took it in my live account. We have a getting a little bit steep, a little bit vertical here. We have a trend line break, 1, 2, 3. You're getting long, either short here on the initial breakdown below the number 2, or if you waited for the other method, the market came back, hooked back down, and you're profitable by maybe 1 or 2 ticks there. I'm not sure, 1, 2 points, who knows. If you exercise any type of money management, you're stopped out at the number 3, next area of resistance, right? Or if you didn't do anything, you're stopped at the initial level above the high of the number 1. But look what happens. We actually get another setup. This high is higher than that high, so we get a new 1, 2, 3 count. 1, 2, 3. Market breaks down below the number 2, gives you a couple retests, and ends up being a profitable trade. Now, this is a no trigger trade or a voided trade. It is what it is. It's neither good, bad, nor ugly. It's a voided trade. What does that mean? Simply a trade that did not trigger. 1, 2, 3. Looking to get long, breaks or closes above the number 2. Market breaks down, takes out the number 1 low. We start the count over. 1, 2, 3. Looking to get long here, market breaks down, takes out the number one low. We start to count over 1, 2, 3, finally get triggered in this last example. Now, you get a gold star on your crown if you can tell me why I like this setup, why I like when these so-called voided or no trigger trades occur. What is likely happening? So we're making new lows, new lows, new lows on the price action, but what is likely occurring? We're likely getting some type of divergence. So it's higher, whether it's an RSI, stochastics, MACD, doesn't really matter. We're getting lows, 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 but higher lows on your favorite momentum oscillator, okay, or no lower lows. So when that happens, that's just one of those filters that we like to add, or I like to add, that helps put the odds in our favor. All right, let's talk about 1, 2, 3 pattern trade management. Again, confirmation of entry is on a break above the 2 or B point for a long, or a close below the B or 2 point for a short. Exit strategies. If you only have the ability to trade one option contract, one stock share, one futures contract, one Forex contract, I would say strive for your initial target, strive for the distance between the number 1 and number 2 points. It's uncanny how more often than not, it will go and tag those, often to a tick and then reverse. But now, if you have the ability to trade multiple lots, multiple contracts, have the flexibility to scale in and out, which is where we all want to be, then use that initial distance between the 1 and 2 to take a third off, 2/3, half your position, and then you can trail your stop, whatever works for you. Nobody can tell you how to manage the balance of your position. Now, I like to use good old-fashioned support and resistance levels, price structure, trend line analysis, but exit strategies, trailing stop methods come a dime a dozen. You have to figure out what works best for you. So I've showed you that this setup works on any market, whether you trade pips and Forex, Pepsi stock, potash, or pot stocks, pork bellies, or the Polish zloty. I've also showed you that it works on any time frame, whether you trade a tick, 15, 4-hour, daily, more, and on any trading style, whether you're a position trader, swing trader, day trader, scalper. Do me a favor, what is everybody's trading style? I'm gonna take a swig of water here. Tell me what your trading style is. So we've got a lot of swingers, couple day, I don't know yet. Very good answer. Swing and day, yeah. I mean, really all across the board. And I'd just like to go through this because ultimately, you have to figure out what your bread and butter is. I've told you in the very beginning, my bread and butter is this pattern, but then broken down even further. Well, how? What time frames? I like the 5-minute on the S&P, NASDAQ, crude futures, as well as the currency futures. I also like the 4-hour to swing trade currency futures, a handful of commodities and FX, and then the daily to swing trade all markets, stocks, options, futures, Forex. The daily is a great market to trade. It's where I got started in my trading journey. So you've seen the proof. Let's view some real trade examples. Not to say that what we just looked at were fake examples, but let's talk about real trade examples that we've used in some of our services. So let's start off here with crude oil. Everybody's familiar with crude. Everybody loves to talk about crude, follow crude, analyze it, guesstimate where it's likely going. I don't really care. I'm just looking at the price action. So this is a daily chart. You can read the text on the right. I'm going to work myself from left to right on the chart. So we have a daily chart of crude. Again, whether you trade CL futures or USO or some other ETF or energy stock, you're going to likely see the same patterns. Not likely, you will see the same patterns. So here we are on CL. Daily chart, number 1 point, it's a 52-week high. 1, 2, 3. It's a smaller 1, 2, 3, but a valid one nonetheless. Now we know in advance where our entry is, where our stops are, and where our target is. Entries on breaks or closes below the number 2. We get a couple retests. Our targets is the distance between the 1 and the 2, measured down, or $3 or $3,000 per contract. You see we met our profit objective, and then we went into consolidation. We went into range bound mode. Now, you can trade range bound 1, 2, 3s all day long if you wish to do that. I like to look for the new highs or the new lows, but this is a solid 1, 2, 3 inside the range. 1, 2, 3 breaks above here, ends up being a nice trade, profitable trade. Now, we have a new number 1 point. Why? This high is greater than this high, so we get a new count. 1, 2, 3. We know our risk is above here. We know our target, our initial target is distance between the 1 and the 2 measured down. We're about $4. So when I saw this trade, I got really excited. Why? Because of the high probability 1, 2, 3 top pattern that we've been talking about, and secondly, we're at a time of the year from a seasonal perspective where the markets, where the energy markets rather, tend to trade to the downside. So when we have those two things paired up together, that's what I call the perfect marriage in trading. So we got short this market. How? We shorted crude futures. We sold call spreads. We bought puts, trade USO, other leveraged ETFs. Met our $4 or $4,000 per contract price objective, and then it traded down another $20,000 per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it. All we did is then trail the market until we either got stopped out or we got a reversal pattern. And I want you to remember this chart and the subsequent charts, because I'm going to show you something really special. So here we have a potential 1, 2, 3. Here we have another potential 1, 2, 3. We also have my second favorite pattern here, which is a triangle. Here we have a beautiful triangle set up, 1, 2, 3. And we're now at a time of the year from a seasonal perspective where the market tends to trade higher. In fact, this is one of the best seasonal setups I have in my back pocket, is to get long crude and other energy markets at this time of the year. But what happened? The market broke down below the number 1 low, traded down another $10,000 per contract, and we start the count over. Start the count over, 1, 2, 3. Finally get this 1, 2, 3 bottom down here, and it trades up $5,000 per contract and then some. Let's talk about gold, another market that everybody loves to talk about. I see people, hear about people subscribing to these expensive newsletters. Gold's going to go here, gold's going to go there. Who cares? Look at the price action and let it help dictate to where it's likely headed. So here on this is actually GLD, the ETF that tracks gold futures. I like to look at the futures market first because it's going to be a lot cleaner, a lot more fluid. You're not going to see all of these gaps, but if you want to start with the ETF, that's perfectly fine. So here we have a 1, 2, 3 top, market breaks down below the number 2, reaches $4 profit objective. Here we have a 1, 2, 3 bottom, double bottom as well. Market breaks above the number 2, gives you a small retest, reaches $2 profit objective. Then it trades sideways. So again, like that crude example, here we have a 1, 2, 3 inside the range. Remember, I'm only looking for new highs or new lows, but this is a nice 1, 2, 3 top right here in the range. Huge trade to the downside. Here we're starting to get new number 1 points. Why? These lows are lower than this low, so we're starting new counts. 1, 2, 1, 2, 3. Market gaps down, takes out this number 1 low. We start the count over. 1, 2, 3. Market gaps higher 2 days in a row. Boom, boom, comes back down and retest. Also get a trend line retest. That's our confirmation to get long gold. How? Buy gold futures, buy call options, call spreads, sell money put spreads, GLD, other leveraged ETFs. Okay, let's look at another example. Delta Airlines, DAL, 4 trade examples. This is probably becoming redundant by now. I'm just trying to show you and hit home the fact about how often and how easy these are to spot. Here we have a 1, 2, 3, market breaks above, retest. Here we have a 1, 2, 3 top. This one gaps down below the number 2. I don't typically chase these. I've got students and members that will trade these, so they're aggressively selling the stock, buying put options. I like to wait for the market to retest or hook back down. We do get another option to short up here. Market breaks down below the number 2, get a small retest, goes $8 plus, and then we have a 1, 2, 3 bottom here at the bottom, or here down below. breaks above, trades higher, then pulls back, ends up going $8 plus. All right, for the Forex traders out there, 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Here we have a multi-session low, 1, 2, 3, double bottom. Again, the aggressive traders are getting long on the initial breakout here. The alternative entry methods are to wait for the retest or the hook back up above, and you're filled on your 70 pip profit objective. Now we're looking for 1, 2, 3 tops. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, 3. Smaller 1, 2, 3 breaks down below, trades sideways, hits a 40 pip profit objective. I get asked all the time, does it work on an intraday chart? The answer is yes, of course it does. 5-minute chart of the mini NASDAQ, 1, 2, 3, breaks above, hooks back up, reaches 13-point profit objective, 1, 2, 3, breaks down below, trades sideways, gives us a little heartburn in the process, finally breaks down. Looks like we make a last flush low here in the last hour of the session. We get a new 1, 2, 3 bottom. Breaks above the number 2. If you're lucky enough to get long on that retest here, you're filled on your 30-point profit objective in about 2 bars. So why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. This is the point of the presentation where I ask, have I fulfilled my promise up to this point? Have I fulfilled my promise up to this point? I'm going to take another swig of water here. Uh-oh, Laurel got kicked out, so it looks like you're back in. It seems so, yes. Absolutely. Carry on. All right. But wait, there's more. You knew it was coming. Usually it ends up being bad for the individual. It says, but wait, watch this, hold my beer, watch this, what they say in the deep south. But I can promise this one has a good ending. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be amazing. So do you remember when I told you to remember those chart patterns? Remember the charts that I just showed you? Hope you do, because we just covered them. So that crude oil example, does everybody remember the crude oil example? This is the exact same chart we just looked at, but with something special added to it. Let's talk about what we're looking at here. This is the same chart of crude oil, but now with the 1, 2, 3 pattern overlay. So you're smart people, you probably figured it out, but let's talk about what these arrows and lines are. So your green arrow is your number 1. Your red arrow is your number 2. Your blue arrow is your number 3. 1, 2, 3. Now, what is this white chevron or this stealth signal? It's not a sell signal. This is not a buy signal. It's simply a visual aid waving at you saying, hey, we have a potential setup. We've broken or penetrated below the number 2 or broken or penetrated above the number 2. So if and only if we break that number 2 bottom or that number 2 high, we get this chevron print. And if and only if that happens, we're going to get these 4 lines plotted onto your chart. What are these lines? The blue line is that breakout level, or could be considered an entry level. Your red line is your stop or your risk. Your lime green line is TP1, or take profit 1, profit objective 1. And your dark green line is TP2, or take profit 2, profit objective 2. Now, if you recall, TP1 is simply the distance between the high of the 1 and the low of the 2 measured down. And TP2 is 2 times the distance of TP1. Now, what are all these green arrows? Why are all these green arrows? This is telling us that we're making new lows. New lows, new lows, new lows, new lows. Once we stop making new lows, we stop getting the green arrow print. We trade up, we get a number 2. Trade down, we get a number 3. Notice we didn't break above the number 2, so hence no chevron, hence no lines. Here we're starting to count over 1, 2, 3. This is the mark. This is the setup. I was just looking to get aggressively long on. We never broke above the number 2. In fact, we break down again that $10,000 per contract, and we start to count over. Here's the same chart of GLD. 1, 2, 3. Market breaks above the number 2. Hits TP1, TP2. We don't get any pattern recognition here because we're looking for new highs or new lows based on my settings. And now we're down here, we're getting new green arrows, which you can see we're clearly hunting for new lows, clearly making a bottoming process. Here's that last 1, 2, 3. Finally breaks above the number 2 there by a tick or 2. Gaps higher, pulls back, TP1, TP2. You can see there's a 1, 2, 3 top in the making over here on the right-hand side. All right, and let's look at Delta. Here's that same chart of Delta. There's the long, there's the short, there's the short, there's the long. And then here's the 5-minute NASDAQ trade. So here's the 1, 2, 3 top, breaks down below the number 2, hugs the breakout area, hits TP1, hits TP2 to the tick. TP2 actually happens to be a new session low, so we get a new number 1 count. 1, 2, 3, market breaks above the number 2, hooks back above, hits TP1, doesn't quite hit TP2, but it's close enough for government work. Shouldn't have lost any money on the trade. We get a new number 1 low. This low is lower than that low. 1, 2, 3. Market just nips its head above the number 2 high, trades higher, loops back above, hits TP1. While we're looking for TP2, we're also making new session highs, so that clues us in that we may be getting ready for a short. So here we have a 1, 2, 3 top. Market breaks down below, gives you a retest, hits TP1, TP2, and we're starting a new 1, 2, 3 bottom. So is this training for you? Only you and you only can answer that. If you're new to the markets and just want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the other noise that we talked about, the paralysis analysis, the indicator overload, if you want to just simplify your process or add a new strategy, or if you need a very specific step-by-step mechanical plan that you could even do part-time, this training could be for you. So I like to stop and tell a little short story about how this came about. So when I had this built out, I brought my wife down to my office, who is a part-time ballet teacher, and I brought my 2 girls down who were like 4 and 5 at the time. Trust me, they don't know a flying flip about the markets, but I showed them the chart, showed them the pattern, what I was attempting to do. After they got, the excitement waned about the colors and the lines and this and that, candles, I explained them what it was and what the objective was, and they got it. They understood it. So my point is that if they can understand it, then you certainly can too. We know, we probably don't remember learning how to count to 3 or learning our primary colors, but that's about all you need to know with a dash of common sense. So I do have a special offer for today's workshop attendees. I do limit this to 25 spots because I am a human being. I actually monitor and manage my own support inbox. I do have a support team, but I do read and evaluate everything that comes in. I will respond to you personally. I love working with my students and members. So here's what the offer is. It's called the 3S code, high-low indicator and scanner. We've had this built for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. We're also going to include the chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, and VIP email support. And one more bonus, we're going to include access to our private Discord channel. We're very proud of this. We just added this a couple weeks ago, and that's included with this offer. So what the heck is the 3S code, high-low indicator and scanner, you ask? Well, let me refresh your memory. This is the 3S code. This is a daily chart of Crude. This is the 3S code. This is Thinkorswim. You can see the 3S code plotted onto your chart for nice, easy, clean swing setups. Here's a chart of Bank of America. There's a long, a long, and then another long. Here's a daily chart of love, LUV, southwest. Here is a short, it's TP1 to the tick. Here is a short, whoops, bad trade. This actually reverses and stops us out, losing trade. Get another short trade up here. And why do all the work when you can let technology do the work for you? Here is a screenshot of my Thinkorswim platform where I'm scanning for 1, 2, 3 tops in the Russell 1000, all optionable stocks that have options on them, $20 a share or greater. I hit the green scan button, and what would take months to deliver is now delivered in seconds. And here's a screenshot of some watch lists. I have one monitor dedicated to watch lists where I scan multiple markets and multiple time frames all at the same time. Now we've been looking at Thinkorswim. This is what it looks like on TradeStation. Here is your indicator component. Here's your scanning component. Here's what it looks like on NinjaTrader 8. Here's your indicator component. Here's your scanning component. Here's what it looks like on TradingView, 4-hour chart of Apple, your indicator component. And here's what it looks like on MT4, 4-hour chart of the Euro Kiwi. There's a long, there's a short, and then there's a long. And full disclaimer, there is no scanning component available on MetaTrader or TradingView. It just doesn't exist. You do get the scanning component on TOS, TS, and MT8 though. Only the indicator on MT4 and TradingView, because the scanning component does just simply not exist. So we know that there's no real crystal ball in trading, but I like to view this as one that provides me a daily process. I'm letting the platform scan the markets for me, locating the setups, going to my platform for entry, and then manage the trade through the exit. And you can start doing the exact same today with the 3S code. So here is the special offers. The 3S code high-low indicator and scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Chart pattern principle, PDF manual, and trading guide. Chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we've recently offered this online. No joke at these prices, $19.97, $14.97, and $9.97. But for today's live webinar special, we're proud to offer this for a one-time fee of $397. The offer link is seasonalswingtrader.com/code. I'm going to answer all of your questions. We're going to talk about all the bonuses, and we're going to look at live charts. So I appreciate your patience. The offer link is seasonalswingtrader.com/code. I just put that into the chat for you. So let's talk about what this indicator and scanner actually does and what's included. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas. That includes the entry, exit, stop, target levels, all color coded, as you've already seen. All the settings are customizable. You can look for different look back periods, as we discussed earlier, where if you want to tighten it up to find more opportunities or expand it out to find less opportunities. You could scan for setups only, meaning those that are in the process of setting up, or those that have triggered only, meaning those have broken above or below the number 2, or both. You could scan for tops, bottoms, or both at the same time. You can scan for day trades, intermediate, swing trades, across multiple time frames, multiple instruments, all at the same time. Bonus 1 is a 90+ page PDF manual. It's yours to keep. You can print it out. You can use it for firewood. I don't really care, but you're going to learn how to read charts, range markets, additional strategies, seasonal strategies, order types, and more. 25 top option strategy guide is bonus number 2. 25 top option strategy guide, literally strategies for all accounts, whether you're just learning to trade basic calls and puts to more intermediate and advanced, such as condors, verticals, butterflies, diagonals, and more. And then bonus 3 is access to our private Discord channel. So we have channels there for stocks, futures, and Forex, as well as swing and intraday. And it's a community where you have access to as a 3S code owner, where we can talk about and share ideas. There are way too many markets for any individual to possibly catch and monitor all markets that are going on at any given point. I would love to know every setup on every market in the world, but it's just not humanly possible. So here's where we can come in, share ideas, share analysis, things that are setting up. Now, these are some unsolicited testimonials. I don't ask for them, they come in all the time. I'm very pleased that people are actually using the 3S code, having success with it, and you can do the same. Here's an example of a SMS text alert that we sent on in one of our other services. These are all based off the 3S code. You see here crude, unlead, pound, euro, nat gas, and we just closed, no joke, $21,000 of profits on 3 markets using the 3S code, and I'll show you those at the end of the presentation. So I do eat what I cook. These are screenshots of my thinkorswim platform. We're doing my equity and equity option trading, as well as my futures account. You see I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And then finally here is just one more example of a nice, easy, clean 2-point trade setup in the EMini SP, good for over $100 per contract. So here's the offer once again, seasonalswingtrader.com/code. I've got a ton of questions to answer. We're gonna look at the members area to show you exactly what you're getting. We're gonna look at your symbols, look at your markets, and I'm gonna answer all of your questions. So give me 1 second here. All right, I'm just scrolling up here. All right, can I explain again how you recount from the number 1 low high in order to look for the new 1, 2, 3 pattern? That might be easier to explain, Eddie, if we look at some live charts, and we'll get to those live chart examples. But we're basically counting from the high of the 1 to the low of the 2 for a 1, 2, 3 top, measuring down for our target, or measuring from the low of the 1 to the high of the 2 and then up for a 1, 2, 3 bottom. And the same rules apply whether it's a 5-minute chart or daily chart. I have TradeStation. Is there any way I can use a scanner to alert me when the entry triggers on a stock? Yes, it is. Yes, there is on TradeStation, thinkorswim, and Ninja. There is no scanner on TradingViewer MT4. Paul, this is a one-time fee. There's no hidden renewals, no recurring fees, no shenanigans. You own it for life. Yes, it does work on Rinko. I don't use Rinko personally, but it works on any chart or any chart type. Rosie, yes, you can absolutely use it for a day. I've got daily scanners running on all markets, and it's just calculating. It's just constantly running in the background, showing me new 1, 2, 3 top and bottom setups. If you want to just hone in on stocks, equities only, or Forex or futures, or create your own custom list, you can do that. The colors, this person has no name. Somehow I got in here, it has no name other than, so I'll call you hash, because it's 2 hash marks. Can you explain what the colors represent on the 4 horizontal lines? Yes, the red line is your risk or your stop level. Your blue line is your entry or the breakout area, and it'll be a lot easier once we look at a chart. The lime green line is TP1, profit objective 1, and the dark green line is TP2, or profit objective 2. No, Scott, no, same offer. Does not work with E-Trade, unfortunately. Eddie, hopefully I answered your question. Let's see, 3 questions. If the futures are strong, I think that's Russell, Laurel. If futures are strong, do I hesitate to short ES? Yes, and I do put filters, and I use filters and parameters. Me personally, I don't think it's smart nor prudent to trade every setup. I'll show you things that I use personally to help me filter out trades. One, it's like I said about being able to have your finger on the pulse of every symbol out there is pretty impossible. And it's going to be almost impossible to trade every setup, even if you wanted to. Not just from a management or a physical perspective, but also from a capital perspective. Unless you've got a multi-billion-dollar account, you can take every setup. So we do look at, we talk about in the members area. We've got video guides, PDFs on things that at least I share that I like to use. But that's part of the community too, for people to talk about, hey, this is working or this isn't working. And you can email me, at support@seasonalswingtrader and say, hey, I found that this is working. And actually, that's how a lot of some of the things when we had this indicator built out, we actually made some additions and we didn't charge a single red cent. We said, hey, all right, let's go add this, let's go add that. And then we just simply had the programmer do it. And remember, he's doing it across 5 platforms, so it's not cheap. But we didn't charge anybody. We didn't say, oh, okay, well, we added this widget, it's going to be another, $500. We just said, okay, this has been updated and now includes this enhancement. Here you go. Honestly, I don't know what else we could possibly do though, but we're always looking for improvement. So you could email me any feedback, what's working, what's not. Let's see. So Laura, let me get to your question. I got so many questions piling in. I'm trying to scroll up. So if the futures are strong, do I hesitate to short the ES? Yes. I do look at multiple time frames, and I am very cautious when we get, we have these vertical moves. We have these 40, 50, 60 point days or 100 point plus days in the S&P. Those are going to be your higher risk trades because they're on a one-way mission, right? Now, with the 1, 2, 3 top, 1, 2, 3 bottom, we are essentially trying to catch bottoms and tops. But I like to see that happening at price structure, or we can drill down to a lower time frame from whatever you're looking at. Maybe if you're looking at a 4 hour, you go to 1 hour, or 1 hour to a 10-minute or 5-minute, and so forth, to look for more sniper, pinpoint type entries. But you have to be cautious on those big vertical moves. Same thing for equities. If SPX options closing day, to wait till after close on that day, I'm not really sure I understand that piece of the question. Do I like the idea of playing bonds where they're flipping out as rates go negative? I'll look at bond futures and I'll look at multiple time frames, and I will consider longer term plays, and I'll factor in some seasonality on some of those. But yeah, I absolutely will trade bonds. Philip, it's a one-time fee. It's not an annual, it's not a monthly, not a quarterly, it's a one-time fee. Yes, you get access to all platforms. We're not putting a restriction on just one. Like, you choose one only, you get access to all. Tatiana, or sorry if I've said that name wrong. You'll have to please email me at support@seasonalswingtrader.com. We'll fix you up. We'll take care of you. Can the lines of software plot be extended until they are broken? I believe so, Joe. I have to take a look at the settings on that. Yeah, you can absolutely place orders on your chart where the code lines are, John. Chris, is not available for interactive brokers. Rashmi, you have inside the members area, there are installation guides and videos on how to install all of this. We understand that sometimes you run into tech issues and things like that. I'm not a tech wizard, don't pretend to be, and understand that we run into issues every now and then. But if you are able to log into this webinar, you should have no problem installing yourself. Should probably be up and running in about 5 minutes. It's really that simple. If you do have problems, I have a support guy that can actually log into your computer and do a remote session and install it for you. Let's see here. No, Jody, does not work with Fidelity. Unfortunately, these are the platforms: Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. We just don't have enough. Demand for those. Ronald, absolutely, we can help you get set up if you need it. There's plenty of installation guides, and I'll just have you. I'll let you guys look at the members area while I'm answering some of these questions here. Let me log in and pull that up. Do the lines for stop and target show up by themselves? Yes. Mohammed, they print automatically, and what you see is what I see. What I see is what you see, and what everybody else sees, unless you start manipulating the settings, which you have every right to do. Then you may have different entry levels and so forth, right? If you're changing your settings, then that will, of course, change what the visual is. But right out of the box, the answer is yes. All right, so here's the members area. When you come down, you're going to see all these resources and bonus materials, setting up scans, customizing, day trading, swing trading, so on and so forth, some other unannounced bonuses. Here's your Thinkorswim PDF guide, as well as videos. Here's just a little video I shot on the seasonality widget inside of Thinkorswim. It's a free widget. Obviously, it's not mandatory. You don't have to trade with that. It's just something I like to add in conjunction with what I'm doing. TradeStation V10, V95, NinjaTrader 8, TradingView, and then MT4. And these are videos here that will walk you through the setup. And again, it's very, very simple. All right, let me make sure I'm answering all these questions. So what is the win percent on this pattern? I love that question because it's an impossible question to answer, or it used to be, because look, we could have 100 people with the pattern appearing on a chart. And I would say that 98 to 99, maybe even 100 of those people will have different results, different entries, different exits. They're trading with different account sizes, different lots. Where are you entering? Where are you exiting? How are you managing the trade? Are you using any type of other analysis, emotion, psychology, all come into play? So there are numerous. I mean, what's the win percentage? What is that measured against? How do you measure that? There are thousands of markets. There's a dozen plus different time frames. Tick, 233 tick, 150 tick, 5 minute, 1 minute, 15 minute, hourly, 1 hour, 4 hour, daily, weekly, so on and so forth. So it's impossible to measure, but we have done extensive amount of back testing. And here's just a few markets that we've done. Gold, 1 hour, 30-year bond, 5 minute, 4 hour chart of the euro currency. And aside from what I just said on why it's impossible, think about the settings. So let me just show you an example here. Think about the settings. So these results are based on these settings. Do you realize that if I go into settings and I go into top, look at all of the different variables and parameters. Minimum bars, depth level, retracement, min bars, min bar break, custom look back period, yes or no. Custom look back period, 126 bars. All of those can be changed by the user, if you choose to do so. So what are the results? Well, that's going to vary based on the thousands, if not hundreds of thousands of different possible situations or scenarios. Hope that makes sense. Let me see here. Just catching up. Bob, we will absolutely take care of you. That would be our support guy that logs in and does the remote session. I'll follow up with him, and we'll make sure you're taken care of. Real-time data. The data, is this real-time data? Yes, it was used. This is real-time right now. I'm not sure exactly what the question is. Yes, I'm looking for new lows to count, or the lowest low to start my 1, 2, 3 counts, bottom counts. I'm looking for new highs for my 1, 2, 3. So here on this daily chart of nat gas, these are new lows, new lows. Here are new highs, new highs, new highs. So we're in a possible 1, 2, 3 top situation here on December natural gas, which is a trade I'm thinking about taking. Here's a daily chart of the EMini SP. This is the 800 points that we talked about. Just finished a huge textbook 1, 2, 3 top pattern. Broke down, textbook 1, 2, 3 down below the 200-day. Broke down below, got a couple of retests. We're clearly rejecting, and we hit TP1. Notice how we reverse at TP1. Why is that so significant? Why is that so important? Look at this. TP1 happened to be the ever important 2018 lows right here at 2,300. It's basically this large psychological round number of 2,300. That's where it reversed. You're going to see that so often. And I point this out time and time again in our Discord channel right here, where the market will come down. You'll see, and you'll start to learn this yourself, that TP1, our profit objectives, whether profit objective 1 or 2, are also keying in at important areas or important levels of structure. So here was a 5-minute chart of the Canadian dollar that I pointed out this morning. I said, we got a 1, 2, 3 top forming at a top or resistance. That's price structure. Look at where TP2 happens to be. Happens to be a 200-day moving average, which acts like a magnet. Also happens to be this next logical area of price structure, this support, this old resistance, which is now support. And there you go. There's the aftermath. And here's all those channels we were talking about. Yeah, same question as Ed's, Muhammad, the win-loss ratio. All depends on the trader. All depends on the trader. How you're managing your trade. Will do, Rosie. Appreciate you joining. Thank you, Elsie, Peter, Roger. I'll be looking for you guys in the ticket box. Appreciate you joining. Oh, no problem, Bob. If you have any issues, let us know. Glad to hear it worked out for you. Gonna wait till 3K to short what? Short the S&P. I'm watching that area. I know I expect it to react there. So here was this huge winner in S&P, and we had another textbook here where we broke above the number 2 high. We got a couple of retests. The short-term moving averages are crossing, and we talked about this being the next area. Why? This is the area that took this leg down, support and resistance, which are now serve as resistance. And then of course we have the 200-day, which is what we're finally clearing, finally cleared. You could see it was overhead, and now we're headed likely up here to 3,100. But I don't try to guess. I'm just looking at the odds here. So yeah, we can look at SPY. You're going to see the exact same setup here on SPY. as it mirrors the S&P. What is the learning curve to use this tool? I would say it's pretty simple. I mean, you know, what we covered today is pretty much the gist of it. And here are all of your, you know, other helpful guides. You know, how I'm using it for intraday trade, how I'm using it for swing trading. So yeah, let's look at the. Let's take a look at some action in the markets today. And bring my just over. All right. So just quick running through today here, the Aussie, the pound. You only get, you know, it all depends on the volatility and the range of the markets, but I would say anywhere from 1 to 3 trades a day on the 5-minute. There's the Canadian dollar trade. Nice trade on the euro currency. If we look at crude oil, so this set up during the inventory report, EIA inventory report. I typically, you know, won't trade around that. S&P. So here was a trade, potential trade there in the S&P. Remember I was telling you about the 233 tick. I learned about the 233 tick chart. I knew about tick, but I didn't really trade it or pay attention to it until I had a member write in and was like, you really need to look at it. And I did. It's quite amazing on the on S&P and crude. Some of the currencies I haven't looked at all markets, but it's pretty good. It's pretty good. You can just see these markets just kind of setting up over and over again. And looks like we just kind of completed one during this session from you know, down below the 200, so 26 from 67 down to 61. Sure, Philip, you certainly can. Jim, this is not an alert service. This is an indicator and scanner. So you find your own setups, make your own decisions. But the Discord channel is there if you want to bounce any ideas. Hey, what about this? What about that? And I'll post trade ideas that that are catching my eye. Can't catch them all, as I told you earlier, but when I do, I'll try to post what I can. Yeah, this is all real time, absolutely. Shouldn't Rosie, the members area should look, I mean, this is what you'll see. 3S code. Again, if you have any questions or problems, send me an email at support@seasonal swing trader. Glenn, if you should get your welcome email immediately. Maybe wait a couple of minutes, check your spam folder. It shouldn't be in there, but if, you may check there just in case. But you should receive your welcome email immediately. It is Mohammed. Would I exit the SPY trade? No, not necessarily. You're talking about the daily, off the daily? I'm assuming you're talking about off the daily. No, but I would be adjusting my risk for sure. I'd be trying to lock in profits. There's no reason not to. You're well into profits. If you haven't taken any off, then I would move at a bare minimum to break even. Or here's next swing low, next swing low, next swing low. And you control your stop that way. That's why there's no answer to a win-loss ratio or the success of the indicator, because everybody is managing their trades differently. Let's see, Eddie's already found the US Japanese yen on the 1 hour. Let's see what we got. So there's the 1 hour, and it did hit. Did hit first target, Eddie. Yes, probably you could track the number of setups that moved 2 more points beyond the indicated entry. It's a good idea, John. I mean, you know, we do have this back tester here. We've had it built out for NinjaTrader as well as Thinkorswim. And we are currently building it out for TradeView, MT4, and TradeStation. And then that will allow everybody to go hog wild. You can set up, you can run it all day long, you know, optimize it, test it, whatever settings you want to use, and you can have those answers at your fingertips. But there's way too many possible scenarios. I mean, it would take a lifetime to deliver all the scenarios. The installation guides are in the members area. You scroll down, here's Thinkorswim. So here's a PDF documentation, here's a video documentation. And then TradeStation, NinjaTrader 8, TradingView, MT4. So all of your studies and your installation guides. Trade the Asian session. I'll trade. I'm swing trading FX, you know, currency futures as well as FX pairs. Not so much trading the S&P or anything like that. I'm pretty much spent. I'm maxed out as far as screen time goes. So by the time we roll around to the Asian session, I've got to let my eyes rest and spend some time with my family. Yeah, thanks, Laura. I do get asked that occasionally about Elliott wave comparisons, and I'll just be frank with you. I mean, of course, I'm familiar with Elliott wave, but I have not tried to marry them up with the 1, 2, 3. You know, very briefly, I did, but then I said I just, you know, I'm looking at other things. I don't need to really delve into Elliott wave. I'll let the Elliott wave experts do that. But I do get some comments based on that occasionally. Yeah, let's look at some things that are in the hopper right now that you can maybe put on your watch list. So I mean, this is just coming off of my scanner. I've got a 1, 2, 3 top stock scanner running in the background, and it's linked to my charts. So let's go back to the daily, and we'll just look at some here. So we've got Slack right here, and using one of the common sense principles I talk about is so when we break below the number 2, we're going to get the lines print. That's why we don't see any lines print. But this is essentially your number 2 right here, okay? Now, what are these common sense tactics that I talk about? I don't like to short right into 200-day support, nor will I go long into 200-day resistance. That's what I mean. You can look. You can make the chart as naked as you want. You can remove all the averages. These are just things that I like to use to help put the odds even more in my favor. What do we have down here? Divergence. What do I mean? High, higher high, high, lower high. What will I be looking at on this trade? Boom. Break of the trend line, and I might miss some profit here by not shorting at this level, but I want to see it close below the 200. These are too close. The 200-day was down here. I wouldn't be worried about it because our profit objective is going to be right around in here. Since this 200-day is tucked so close to the breakout area, I would expect to see some stalling going on. So I'm only going to wait for a solid break down there. Peloton, same thing here. Notice that it broke below the number 2 by maybe a penny or two. I only want to see closes, breaks, and closes below the number 2 before I get long, and the shorter term moving average to have crossed. Plus, what do we have? That pesky 200-day right there. Let's look at another one. AstraZeneca, AZN, possible top going on here. Possible 1, 2, 3 top there on Grub. So that's just an example. And we actually front run these. We got short last week on W, and we also got short stamps.com. So haven't quite triggered the 1, 2, 3 top yet, but went ahead and got short. Soy mill short. What's the ticker for that N? So this daily chart here on ZM is not a short, and we're actually long right now. We're actually long July corn, even though it didn't really get my confirmation. You can see it clearly did not get my confirmation. We peaked its head right here and right here, but we never got a close. And I'm also long soybean oil. And this is great. This is great. I love to see this. Look at where TP1 is. Can somebody tell me what else is going on? $200-day average is right there, acting like a magnet. I can't guarantee anything, but I would say that we have a pretty good likelihood of coming up to 29 even, which is a 200-day. So I'm long call options. I'll be taking profits there, at least on a portion of my position. So yes, you do use this to trade options. I favor credit spreads, selling call spreads, selling put spreads, to trade equity options, or to trade equities, and to trade commodities. But I will buy calls outright, buy puts outright, just depending on the situation. What was the so what was the symbol for, what is it, Modernera, the guy that supposedly made $1 billion, the clinical drug? Let's see if it pops up. I don't know. Does anybody know the symbol? There you go, mRNA. All right, so there you go. Possible topping situation going on. Moving averages are spread apart. No trade for me. Right in 200-day. It's why I avoided the trade, or why I would have avoided the trade. Coffee, I don't have futures on Thinkorswim. I've got it on other platforms. We can look at Joe, the ETF. It's kind of ugly. This is a really wide 1, 2, 3. You know, if we were to trigger, I probably would not trade this as a typical 1, 2, 3, just because you know, the length, the longevity of the pattern. So that's not too common, but that's just my observation there. XOM. There's your chart on ExxonMobil. Yeah, I mean, again, so what you are seeing right now should be what you see, essentially. That is, you know, depending on if you're going to come in here and change a bunch of settings. Now, I think these are default settings, guys. So I like to see, you know, pretty much how it's delivering the signals out of the box. But here, you know, and all of this is explained in the members area. So the minimum bars, that's just saying, hey, I want to see at least 2 bars or 3 bars or 4 bars between the 1 and the 2, which I think that's a more valid signal to have more bars. But I've got it down to the nitty gritty bare bones settings of 1, because I want to be alerted even if it's just 1 bar, and then I'll do my own analysis, if that makes sense. Here, if you want to see a bigger depth level in percentage terms, meaning a bigger retracement between the 1 and 2, you can do that. Right here, custom look back period is set to yes. I think out of the box, it's set to no or false, depending on your platform. I changed that to yes, but again, it's up to the user. But once you fire it up, you should see what I'm seeing. Yeah, the U.S. Mexican, we're actually talking about that with one of my traders in the Discord. He loves trading the peso. He's found a lot of success trading off of it on an hourly chart. And so I've been looking at this setup for quite a while. There's this triangle forming here on the U.S. peso. And I know right into the last hour of the day yesterday, we talked about it's the hourly, and I pointed this setup to him. We had a huge pop there, right there at the open, and then it ended up trading to the downside. But if you notice, a lot of these two will come to the 50% profit objectives. Again, that's if you want to take, figure out a way to take profits or manage your trade. How do I determine my strike price with the options? It all just depends on my outlook on the particular market I'm trading. So with like commodities and commodity options, if I have a longer term viewpoint, I might be willing to buy further out of the money, and I'll target the strike price. I'll look to buy the strike price that's my target. As far as like equities and things like that, a lot of them I don't want to get too married up to for an extended period of time. Just want to swing trade them. And again, that all just depends on how high of a conviction it is for me, current volatility, implied volatility, things like that, on how close I'm going to be selling those, or sometimes trading, in the money. Sometimes I'll sell, 2 or 3 strikes in the money. It just depends. I don't really have an exact answer for that. These are the shorter terms here are the 5 and 21. The longer, this purple is the 200 for reference. And look, I totally understand. You can remove them if you wish. If it's just noise to you, you won't be naked. That's a great way to trade. I just like to see these. I've been using them, and I'm accustomed to seeing them, and it helps me confirm especially when we have a lot of different markets I'm looking at. HYG. So there you go on the high yield bond ETF. So here we had, the number 2, or the whole pattern triggered based off this bar. We gapped up. I would think that would not be wise to go buy this. Wait for the market to come back and retest, which it did. It held, and depending on your long, should be long from anywhere from 78, 78.5, we'll call it. And I would be cautious up here, because we got the gap high, we got this gap high, 200-day. So don't get greedy. If you're buying, trading that underlying, buying options, take some profit there. Take some profit, move your stops up, and then let her see if she'll rip up to the upside to TP1. But look at where TP1 is. I just noticed that TP1, all of this resistance, past price structure. It's not by coincidence. No, do not use unusual options activity. All right, guys. I think I've answered your questions. I hope I did. If I missed any, I did not do it on purpose, but please email me support@seasonalswingtrader.com. Do my best to get to you this evening. If it's something more like technical related and you need some assistance, my guy can log in to your computer and do a remote session if need be, but should be up and running, no problem. Yeah, so this is how I use it. I mean, it's nothing to hide. This is how I use it. It works, plain and simple, and it's one of the first patterns I learned when I started off trading. And I probably, like a lot of you, I went off the reservation and bought some other, I'll call it crap, other indicators and widgets and, you know, blingy jazz that were supposed to do this and that. And I said, what am I doing? And because it was working, it was already working. It's not like it was failing me and I needed to find something new. It was working, but you know, I got greedy. I was in learning mode. I wanted more, and you know, went back to the roots. Correct. Yeah, first target is measured from low, this low, to this high, whatever that distance is, was called $78, and we'll call it $68. It's gonna be measured up, so it's $10. First target, $88. Right around, you know, you get the point. For a 1, 2, 3 top pattern, if we go back to say that natural gas example that is hot on my radar, is the high of the 1. Ignore the purple arrow. That's something totally different. But see, we have a green arrow. That's the high. Measure to the low, and whatever that distance is, you measure down. That's TP1. TP2 is the distance, is 2 times the distance of TP1. I'm not sure about the $45. These are the trades that we just closed out. So here's June crude. We were long from a 1907 price point, exited our balance at 32.50. We traded September heating oil. And we also, we didn't trade them. Well, we traded them. We are still in. We were flat crude. We were long RBOB unleaded gas and long heating oil, over $3,000 a contract per each of those. Yeah, that's the way. That's it. Usually, the first one you learn is probably your winner. Yes, Jim, 5 and 21s. All right, guys, I'm going to head out. I appreciate your time. Thanks for all the questions and interest. Thanks to those that joined. I'm going to get to you. Had a great time. I mean, I love this stuff. I live, eat, and breathe it every day, all day. We got some exciting things in the hopper. We got the Discord channel over here that's growing. We've got the optimizer, the back tester component. So we look to be doing some really cool things in addition. So anyway, ask me if you got anything else you can think of later today, tonight, tomorrow. Shoot me an email, support@seasonalswingtrader, and I'll be happy to get to you. So everybody take care, and hope to see you on the inside. You're welcome. Thanks, guys. Will do, Laurel. Thank you for the input. All right, take care. Bye.